welcome. We're so glad you could join us today.
Yeah, thanks for tuning in.
We have a massive one for you today because we are unpacking what is arguably one of the most critical moments in Pfizer's recent history.
Absolutely.
We're going deep on the fourth quarter 2025 earnings call. It just dropped on March 2nd, 2026. And honestly, the stakes, they couldn't be higher.
They really couldn't. I mean, this is a company that, it defined the pandemic era for so many. But for the last couple of years, the big question on Wall Street has just been, is there life after COVID?
Exactly. Is there a pivot?
They've been promising one, and this call was basically their report card on that promise.
And everyone is watching to see if they can actually catch up in this obesity gold rush against Lilly and Novo. So we're going to dissect the prepared remarks from CEO Albert Bourla and his team, and then my favorite part, we're going to go round for round through the Q&A with the analysts.
Well, yeah.
Because that is where the gloves really came off.
It was a fascinating session, but let's start with the headline numbers from their presentation first, just to, set the stage.
Right. So looking at the financials, they posted full year 2025 revenues of $62.6 billion. Now, if I'm just looking at that, I see a 2% decline operationally. That doesn't exactly scream growth story.
Context is everything here. Yes, the top line is down slightly, but that is entirely due to the huge drop-off in COVID products, which, we all expected that.
Sure.
If you strip out the COVID portfolio, if you look at the underlying business, the stuff that actually matters for the next decade, they grew by 6%.
Okay, so that's a healthy number for a pharma giant.
It's a very healthy number. It shows the engine is actually running, even if that, COVID parachute is gone.
And they beat on the bottom line too, didn't they?
They did. Adjusted diluted EPS came in at $3.22 for the year. And for any shareholders listening, they returned a staggering $9.8 billion in dividends. They're really trying to signal that the cash flow is secure.
But they also took a hit. I saw something about a multi-billion-dollar charge.
Yeah, a $4.4 billion non-cash impairment charge, which in plain English just means they're admitting some of their past bets didn't quite work out.
So a bit of a cleanup.
Unnecessary cleanup. They're deprioritizing assets like disitamab vedotin to clear the deck. It's painful on paper, but it frees them up to focus completely on the winners, like PFE and bladder cancer.
Okay, speaking of winners, let's talk about their slogan, the year of execution for 2025. Did they actually execute, or is that just corporate speak?
The scorecard looks pretty good. They landed 4 key approvals and kicked off 11 pivotal studies. But the real story is this whole new Pfizer identity.
Post-Seagen.
Exactly. Post-Seagen acquisition, they're seeing double-digit growth in those new oncology products. And they reaffirmed their 2026 guidance, aiming for up to $62.5 billion in revenue.
So they're telling the market, we've stabilized the ship, and now we're ready to grow.
That's the message.
Okay, stabilization is good, but growth requires a blockbuster. And that brings us to the news everyone was waiting for, the obesity pipeline. They released data on VESPR3, that's their asset 3944. What makes this drug different from, the Ozempics and Zepbounds of the world?
It really comes down to one word: frequency.
Okay.
The current market leaders are all weekly injections. Pfizer's asset, 3944, is an ultra-long-acting GLP-1 designed for monthly dosing.
Monthly? That is a massive lifestyle difference. How are they even achieving that? These drugs usually break down pretty fast.
It's a brilliant bit of chemistry. Think of it like a hitchhiker. The drug molecule is designed to bind to albumin, which is a protein that just floats around in your blood for a long, long time.
So it latches on for a ride.
It straps itself to the albumin, exactly. And that way, it avoids getting filtered out by the kidneys. It stays in circulation much longer, which allows for that once-a-month shot.
Okay, that sounds great in theory, but did it work? Because if I'm taking a shot once a month but I'm not losing weight, I don't care.
The data was strong. At week 28, so about 6 months in, the medium dose showed 12.3% placebo-adjusted weight loss. And crucially, the curve hadn't flattened out yet. Patients were still losing weight when the data was cut off. And on the safety side, no severe diarrhea, which is often the deal breaker. It was enough to give them the confidence to go straight to phase 3.
Okay, before we get to the analysts, one other thing they mentioned was AI. And I know every company says AI right now. Is Pfizer actually doing anything with it?
It seems like they really are. They've deployed over 1,200 GPUs I mean, think of that as a massive supercomputing cluster just for drug discovery.
Oh.
And they claim it's improving productivity across R&D, manufacturing, even sales targeting. They're framing it as their core strategy for keeping costs flat while doing more research.
All right, that's the company line. Now let's see how it held up against the experts. The Q&A was intense.
Let's do it.
First up was Chris Schott from JP Morgan. He went straight for the jugular on the obesity drug, asked about tolerability, specifically vomiting, and the big commercial question. If this drug is slightly less effective, does a monthly shot even matter?
Yeah, the classic convenience versus efficacy debate. Chris Boshoff, the CSO, he defended the safety profile. He said adverse events were pretty evenly distributed between the weekly and the monthly arms. But here's the key nuance. In this study, they didn't allow titration.
Okay, unpack that for us. What does titration mean here?
It just means adjusting the dose. Usually, if a patient feels sick, you can lower the dose for a bit until they adjust.
Right.
In this study, they couldn't do that. So Boshoff's argument is that in phase 3, when doctors can adjust doses, tolerability will look even better.
And the commercial side, did they concede on efficacy?
Not exactly. They argued that for many patients, the burden of a weekly show is high. They think the monthly value proposition is huge, especially in that $150 billion ex-US market where people often pay out of pocket. They believe they can be best in class for a monoagonist.
Interesting. Okay, Vimal Devan from Guggenheim was next, and he stayed right on this topic. He wanted to know the nuts and bolts of that phase 3 design, specifically about that titration you just mentioned.
Right. Boshoff clarified that VESPR3 was aggressive, only 2 step-up doses. The phase 3 trial, which is called VESPR6, will be more gentle. It'll allow for different titration schedules, which should, in theory, reduce nausea. They also promised more data at the ADA conference, including on their combo therapy.
The one with amylin.
Exactly, the amylin combo.
Steve Scala from TD Cowen jumped in next with a really specific question about the control group. He asked if the placebo arm gained or lost weight. Why would that matter?
He's checking for noise. If the placebo group lost weight just by being in a trial, it makes the drug's effect look less impressive.
Got it.
But Boshoff confirmed the placebo arm was stable, the weight loss was real. Scala also pivoted and asked about Vyndaqel, their heart drug, and that patent cliff coming in 2028.
And Burla was pretty blunt on that one.
Very blunt. He just said they are modeling for a full patent loss at the end of 2028. No magic tricks, no settlements. They're facing it head on.
Then we had Jeff Meacham from Citibank, who asked a question that sounded almost like sci-fi. He asked if monthly is the limit, or could we go to every 2 months?
It sounds wild, but Pfizer's actually working on it. Boshoff mentioned they have a phase 1 propeptide asset that could potentially be dosed quarterly.
Once every 3 months.
Once every 3 months. But for this current asset, 344, the limit is monthly. And they're keeping the phase 3 trials focused on metabolic indications for now.
Terrence Flynn from Morgan Stanley brought us back to reality of a key safety question. He asked about the duration of side effects. This is what I was wondering. If the drug is in your body for a month, do you stay sick for a month?
That is the #1 fear with these long-acting drugs.
Yeah.
And Boshoff, he reassured him. He said despite the long half-life, they didn't see clusters of severe events or, prolonged misery when patients switched doses. He said there was only 1 severe vomiting case in the entire program.
So the drug hangs around, but the acute side effects don't seem to.
That appears to be the case, yeah.
Okay, complete shifting gears. Akash Tiwari from Jefferies brought up oncology. He pointed out that the data for their lung cancer drug sigvotatug vedotin looked kind of underwhelming compared to standard chemo. That's a tough look for the new Pfizer.
It was a fair critique. Boshoff had to be pretty honest here. He acknowledged that in the second-line setting, ADCs, these antibody-drug conjugates, haven't beaten docetaxel yet.
Okay.
However, he did point out their single-agent response rates were over 30%, which is solid. But the real test, the big money, is the first-line study combined with pembrolizumab. That reads out soon.
Asad Haider from Goldman Sachs asked about the ViiV healthcare divestment. For those who don't know, ViiV is a major HIV company Pfizer had a stake in. Why sell?
It's all about cash and focus. Borla and the CFO, Dave Denton, basically explained that ViiV, while profitable, isn't strategic for them anymore. By selling their stake, they free up a lot of capital. And that capital goes right back into R&D to fund these massive obesity trials and those AI initiatives we talked about. It's moving money from a cash cow to a growth engine.
Courtney Breen from Bernstein followed that money trail. She noted the $11 billion R&D budget for 2026 and asked, well, what about 2027? How are you paying for all this?
And this is where that AI strategy really comes into focus. Dave Denton said the budget is staying flat at around $11 billion, even though they're doing more work. He explicitly credited AI for allowing them to do more with the same.
That's a bold claim.
It's a very bold claim that technology is basically acting as a deflationary force on their entire research budget.
Umar Rafiq from Evercore asked a nerdy but really important question about dosing math. He asked if the 9.6 milligram monthly dose was a reaction to the data or if it was always the plan.
Right, because that tells you if management is panicking or just executing their plan. Boshoff said it was planned all along. The 9.6 milligram monthly dose is just mathematically equivalent to the weekly dose they were already testing. The new data just validated their model.
Got it. And he also asked if the amylin combo could be a pill.
And the answer was a clear no. The amylin combo is an injectable. They have separate oral programs, but this high-efficacy combo is a shot.
Okay, Jason Gerberry from Bank of America drilled down on that combo. Why even add amylin? Is it just to compete with Lilly's super high-efficacy drugs?
It's about segmentation. Boshoff explained the combo is for best-in-class efficacy for maximum weight loss. The monthly monotherapy is for convenience.
So they have two different customer profiles in mind.
Exactly. The commercial team sees the market as split. Some people want to lose 25% of their body weight no matter what. Others just want to manage their weight with the least hassle possible. Pfizer wants a drug for both of them.
Michael Yee from UBS asked about an oral GLP-1 they just licensed from Yao Pharma. Why bring in another asset?
Diversification. Boshoff noted this new one is a small molecule, not a peptide. That's a big deal for manufacturing. It's cheaper and easier to make. It's about to enter phase 1 in the U.S. It's another shot on goal if their other internal pills stumble.
Alex Hammond from Wharf Research asked about a program we haven't even touched on, the Lyme disease vaccine.
Yeah, this is a potential sleeper hit. I mean, we haven't had a Lyme vaccine in years. Boshoff expects a readout in the first half of 2026.
And the market for that?
It targets 400,000 people in the U.S. and over 100,000 in Europe. If it works, it's a first-in-class vaccine with zero competition.
Mohit Bansal from Wells Fargo went back to the core strategy. Is monthly the main differentiator, or are they chasing efficacy?
He said it's both. Boshoff is predicting around 16% weight loss for the monthly drug, which is highly competitive. But then he mentioned something really interesting.
What was that?
They're designing trials specifically to switch patients from weekly competitors to their monthly option. They are betting that once a patient tries once a month, they will never want to go back.
That is a very aggressive commercial strategy. Okay, then Evan Siegerman from BO asked the question everyone in tech asks. Show me the ROI on AI. Is it just hype?
Borlo was so ready for this one. He didn't give vague answers. He cited golden batch analysis in manufacturing that saved hard costs.
Specifics?
Very specific. He talked about pre-call planning for sales reps where AI tells them what to discuss with a specific doctor. He was very clear. The metric is speed and cost, and they are measuring it.
Dave Reisinger from Leerink pressed on that amylin asset again, 3945. He wanted to know if it was biased toward calcitonin, which can affect safety.
Boshoff got technical here. He clarified it's a dual molecule, not biased. But the key takeaway was that the monotherapy alone showed 8.4% weight loss in just over a month, with placebo-like tolerability.
So the implication is when you stack it with the GLP-1,
you could get massive weight loss without making people feel miserable.
And finally, Louise Chen from Scotiabank closed it out. She asked about the Segan integration and a very specific oncology asset, the PD-1 VEGF bispecific.
Right, so the Segan integration is reportedly done successful. Most of the staff stayed, which is rare. But that PD-1 VEGF asset, number 4404, it's fascinating. Think of it like a magnet that gets stronger when it's near a tumor.
Right.
It has a 100-fold increase in affinity for PD-1 only when VEGF is present.
So it targets the tumor environment specifically.
Exactly, potentially avoiding side effects elsewhere. And they're launching phase 3s for that in colorectal and lung cancer immediately.
Wow. Okay, that was a marathon. We've covered finance, obesity, oncology, AI. If you had to distill this for our listener, someone who wants to know if Pfizer is back, what are the main themes?
I think it comes down to 4 things. First, financial resilience. They survived the post-COVID crash. The business ex-COVID is growing at 6%. The floor is in.
Okay.
Second, obviously, is the obesity strategy. That monthly dosing is their ace in the hole. They are betting everything that convenience will win a huge chunk of that $150 billion market.
And they get it too.
Third is oncology leadership. With Segan fully integrated and assets like that PD-1 VEGF bispecific, they are positioning themselves as a true cancer powerhouse again.
Right.
And finally, operational efficiency via AI. They are really trying to prove that a big old pharma company can use tech to keep costs flat while ramping up research.
So 2026 is the year they really have to prove that this new engine works.
Exactly. They're calling it a pivotal investment period. They're building the bridge to the post-2028 world.
It leaves us with one big question to chew on then. In a world where everyone is racing for maximum weight loss, is convenience actually enough to dethrone the current kings? Can a monthly shot really beat a slightly more effective weekly one? That's the gamble Pfizer's making.
And we'll be watching very closely. Ideally, we'll see the answer in that phase 3 data next year.
Absolutely. Thanks so much for listening to this breakdown of Pfizer's strategy. If you found this helpful, please share it with a colleague who needs to get smart on the pharma sector quickly. And we'll catch you on the next one.